Welcome back to the channel. It's Errol with Passion to Profit, and in today's video we're going to talk about how to avoid trading hesitation. Now, this is one of my favorite topics to talk about. To avoid trading hesitation, you need a trading plan. And by focusing on a trading plan, it's going to indirectly help you with the psychology of trading and how to manage your emotions overall. This is going to be a really informative, interesting video, so if you have notes to take, make sure you take those. Write down any vocabulary words that you hear me say that you might not understand so that you can go back and Google them later so you don't miss any future information. Now, one thing I want to say before we get into the video is, if you're someone that's new into the market, and just for everyone in general, be careful of people that are trying to take advantage of novice traders. I see a lot of people online kind of saying, hey, do this, do that, yada, yada, yada. All I'm saying is, from someone you don't know on the internet, make sure you're fact checking everything they're saying. Honestly, like, including myself, everything I say or do, fact check it, see if that makes sense, and just see if it's true overall. That's one thing I want you guys to look out for. And I know some of us might be strangers too, but if you don't want to be strangers anymore, make sure you hit that subscribe button and join the trading community. That's just something I just wanted to put out there. Now let's get right into the video. Now that we're in my computer screen, the platform that I'm using right now is Thinkorswim. So if you sign up for an account with TD Ameritrade, you'll be able to download their free program called Thinkorswim. And I definitely recommend this platform because they do offer so many features that most brokers do make you pay for. I'm going to use ACY as an example, and I'm going to talk about some of the things that you'll need with your trading process to help it make a little bit more sense so that you can not really hesitate on your trades. So number one, what is your setup? What is your trading setup? What are you trying to see when you get into the market? What's a familiar, repeatable action that you usually see that you're going to be looking for? Not, I'm going to wake up and I'm going to go into the market and I'm going to look for something that's moving so I can just jump in, because then you're just going to get random results getting into random things. And that's just going to cause a lot of issues when it comes down to your mental, and your psychology is going to be messed up once you start taking losses and you don't know why. Then you're going to be scared to get into trades. So then when you do have proper knowledge, you could hurt yourself because now you're scared to get into trades. You don't trust yourself just because you were doing all this damage when you didn't even know enough to trade yet. And that's completely fine, but it's important to be aware of that. And right now, I'm just going to use ACY as an example, and you guys can start tracking your own statistics. And it's going to make more sense as we get into this video. When we wake up, I know many of you guys, and we were all in the group chat, we saw ACY pushing up. Now, for me personally, the first thing that I do when I see a stock gapping up in the morning is I measure to see how much it's up. And if I measure from the closing price to the open price, it gapped up 59%, roughly 60% it's gapping up. And to me, and based off of what I've seen in my experience in time in the market, a 60% gap up isn't too bad. That has potential on both ends. Yeah, it could drop. It has enough room to drop, but again, it has enough room to go up. It's not too overextended. One thing many people don't usually do that I do every single time is I then check the float and the market cap of the stock. So if I see ACY gapping up 60%, I like this movement in the pre-market. And again, when it comes down to seeing things what you like, it's going to come with a lot of screen time. You can kind of tell which stocks look a little bit more broken down than the others. But right after that, I'm going to pull up FinViz, and let me just get that right over here. So right now I have FinViz pulled up, and what I will do is I'll go to Screener. After I go to Screener, I'll come down here to Ownership. And after I click Ownership, I'll type in the ticker that I'm looking at. So I'm looking at ACY, type in ACY. The market cap is 14 million, and the float is 1.2 million. We're dealing with the micro float. And again, if you don't know what the float is just the supply of shares available to the public. And that's a very low float. What will give you a better idea with what's a low float versus a larger float is honestly just screen time, tracking statistics, seeing these over and over again, seeing how the lower floats react based off of how much volume they're getting and things like that. So you can track more statistics and overall more screen time in the market. You're going to pick up on things like this. But if I know this stock ACY is gapping up 60%, and again, which I said I liked because it's not too much, and you can derive a lot of these things from statistics as well. It's a low float and it's a low market cap, especially with such a low market cap. That's kind of letting us know too that this stock can be very, very volatile. And then especially with the low float, we know the shares are going to be trading and just recycling hands throughout the day if this does get some type of momentum. I know you guys know what happened to this stock afterwards, but I'm just using this again as an example. How do you not hesitate on something like this? To not hesitate on a trade, you first have to know what you're looking for, because if you know what you're looking for, you can kind of see around a corner if you know what you're looking for. And if you can see around a corner, you have a huge edge amongst many active participants in the market. So if you want to track statistics on pre-market breakouts on micro float stocks, then you can go ahead and do that and see how profitable the breakout is going to be on this specific ticker. So it's not that you're just buying the ticker. There's a specific action you're looking for, which is the pre-market breakout. And then you'll notice a lot of stocks have different reactions depending on the float zone and the market cap zone, and also the volume and things like that, and whether this had a catalyst or not. But the first thing I'm going to do is put a resistance in my pre-market high, because that's the first level I'm going to be wanting to look out for. Why? A lot of short sellers like to risk the pre-market high or the day high. That's why whenever we get a break through the highs, we can see an extra kind of dramatic push, because short sellers are getting squeezed out of their position. So just remember, there's someone on the opposite side of the trade as well. So you really kind of have to know, if I'm going long, where might the short sellers might be putting their risk levels, and what might they be thinking when the stock does this? Or if you're shorting the stock, you might want to think, okay, where are the longs going to try and come in at? And if they do come in, where do I think they're going to be risking off of? What level on the chart makes sense for them to risk off of? And again, a pre-market high is a level where short sellers definitely get scared in their positions. And especially on a micro float, in my opinion, I don't think anyone should be shorting any type of micro floats. That's just, you're kind of just asking for it at that point to get squeezed if you're shorting some type of micro float, because again, they don't take much demand to get these things started, and then momentum traders to hop on them, and then short sellers just get straight squeezed out, like you do see here right now. And let's just zoom into our breakout point. We can see right at our breakout point, we got some type of consolidation. So it's not just some random line. It has some type of significance at this level. You can see right as it's breaking this level, that's when we get this massive push of literally like 10 straight green candles. And I can bet you short sellers were riding this thing up. Some of them probably cutting their losses here, cutting their losses here. I think this thing was halted about 4 times on the way up with straight green candles. So a lot of short sellers holding onto the positions, and then they see it squeezing past 20, then they got to cover, see it squeeze past 30, then they got to cover, because then it could be another Kodak moment, which some of you guys remember, I believe last June it was, and it went to like $60 something. Insane. So some of these low float stocks are really no joke. I think I remember like SRNE, I remember SPI, and you can go in the past and research and just study the past so that you can understand what might happen in the future. But let's get back to, how do you not hesitate on something like this? How do you not hesitate on buying this breakout? The way you're not going to hesitate is by having confidence in a trade. 9 times out of 10, when someone hesitates in a trade, it's because they're not confident enough, or they don't believe in what they're doing. So then they end up missing the move. And the issue with this is, a lot of people that kind of see their setup coming, when they wait too long and it gets away from them, they then feel emotional. And then a lot of the times they'll force their entry, which then gives them a bad entry in the stock, which then messes up their risk. Because if you enter too late, you might have a wider risk, because the level that you truly want to risk off of now is probably further away. So that's one issue. It can just kind of be a snowball effect. So it's just important to have a really efficient game plan in place. And if you see what you're looking for, you get it. If it never comes, then you just don't get it. Don't go off chasing some other stock that's spiking, that's not even in your niche of the market, just because you want to put in a trade. But let's come back to this pre-market high again. It looks a little distorted right here, just because it looks so tiny in the pre-market, because the move during the day was so massive. But one thing you can personally track if you want to, let's say, okay, I want to buy this breakout level, and let me get my little tool. Say you want to buy this breakout level, X marks, say you want to buy this breakout level, X marks the spot. And where's your risk level going to be? Do you want to put it underneath the day low? Because we know, okay, if this does break the day low, it's letting me know that the trend isn't even in my favor. So why would I want to be in it as a long if it breaks the day low? So again, these are just kind of clear levels many people will risk off of. And again, track your statistics. Track your statistics. How many micro float stocks, when they're gapping up in this specific range with the micro float, low market cap, all of that kind of stuff, what's the win percent of buying the breakout and risking the day low? Well, what's the win percent? And let's say the day low is too far for you to risk. All you have to do is size down. Let's say you normally risk 5% in a trade, and the day low, or the point that you want to risk off of, is 10% away. Just go in with half the size you would have gone in with that 5%, because we know percentages are relative to the capital that you're using. So that's one thing you do. You kind of just have to mold yourself for the trade if it's your setup, because your setups aren't going to look exactly the same every single time. They're just going to be the same setup, just a different scenario. They're going to look a little different, but overall it can be the same trade. Track if there was a catalyst this day, and the catalyst is just the reason for why this stock spiked. Like, why in the first place was it getting people's attention? What was the significance? What drove attention to the stock? That's pretty much it. And on TD Ameritrade, again, you can click the live news tab, scroll down, and even just find the days and statements when they're releasing any type of new news and press releases. Live news tab on TD Ameritrade is really nice for that. Another thing, level 2, you can check at this breakout point. What are the orders are we seeing on the level 2? What are we seeing on time and sales? Are we seeing orders going through? These are just little things that can give you more confidence in the setup that you've already been studying. This isn't just a random trade you're seeing and you're taking. You studied the past. You got micro floats. You checked to see how they were breaking out of their pre-market highs. So you did your research. You did your homework. That's what's going to give you the confidence to get into this trade. Because another thing why someone else, and again, it's not about money at all, but if we really think about it, if two people buy this breakout right here, who's going to make more money, right? And let's say they both have the same capital. Let's say they both have, let's just say 10 grand. Who's going to make more money on this trade? It's going to be the person that has more confidence in this trade. And what's going to give you confidence into this trade? By doing your homework and studying the history so that you know what's going to happen in the future, because history repeats itself over and over again and it never fails. And a lot of these moves are just by human nature. You know, we get the big rush up, the pump, the dump, the bounce, and then the fade. We see it all the time. So track these patterns, screenshot them when you do see them, track statistics on whatever it is you're looking at, whether it's a pre-market breakout on a micro float. Because again, I will tell you this, the breakout on a micro float is going to be different than a float that has 200 million or 300 million or 400 million micro cap market cap, or even just a 500 million float. It's going to react completely different. I can guarantee you, for the most part, it's probably not going to make a move like this if the float or the market cap is that large. So that's definitely something to keep in mind. You really want to isolate certain variables to find consistent outcomes with whatever setups you're looking at. And one last thing I have to say before I move on from ACY, once you see some type of parabolic move like this, do not touch it. Just don't touch it. A lot of people start to get some massive FOMO in the chats and just on social media, because when this is shooting up, they're halting, then they'll halt for just a little bit. Then people are like, yo, is this going to go up even more? Like, I can't believe I'm missing out on such a move like this. We don't see this every day. And then, you know, you don't want to be the one to get caught up here, because it actually halted at $38, right? It halted. So if you're sitting in this, you don't know what is going to happen. You're hoping that it's going to push up again like it did on these previous green candles. But on this one, it was halted for a while and then opens up at 1373, or I'm sorry, it opened up at 1713, right? Pushes up a little and drops. And then we get another, I believe it halted right here again, then pushed up a little bit and then just faded for the day. So again, these are just the natural frameworks of the stock. You get the pump, the run up, you get the drop, you get the bounce, and you get the fade. That is just the natural movement of stocks, again, because it's just human nature. No one's going to want to buy this stock, and no one thinks it's going to break this high again based off of what it just did, this massive dump. I mean, from $38 to $17. Don't chase these stocks, okay? Don't chase. If you miss the move, you miss the move. I can't stress that enough. And I just want to help you guys out so that you can just shorten up your learning curve and not go through kind of mistakes that you don't have to go through. Like, it's not necessary for you to feel the pain of something like this if you can just learn before it happens. So that's another thing to look out for. That's pretty much it with ACY. I just wanted to give you guys a better idea of what I meant with tracking a setup. Pre-market breakout, now track the variables. Add as many variables as you would like, take away as many variables as you would like, but just know the more variables you do add to a trade, the less the frequency of the pattern will appear, but it may increase the 1% of the pattern by adding certain variables. It's like a filter. The more filter you have, the less you're going to get through it, but it might be higher quality. And especially if you're someone that's still starting, you just want the high quality setups. Don't care about trading every day. Don't care about trading every single week. Just care about, I want to be able to capitalize and execute on my opportunity that I've been studying from the past in the history, and I'm waiting to see that again so that I can execute on it flawlessly, or at least to the best of my ability so that I can keep learning. So that's pretty much it with ACY. NIO, I'm just going to pull up real quick just because NIO has been having so much hype around it. And I know a lot of people have different plans with NIO. Let's just start off on the year chart. And now this type of trading is going to be completely different from like a pre-market breakout on ACY, right? The fundamentals on NIO versus ACY are completely different. NIO is just overall a better sustainable company at the moment. I mean, we're trading at $67 now, or at the high at almost $67. And just within a year, NIO was a penny stock. I remember trading it one day when it was active at like way below there underneath $5. And now look, this is something with more decent fundamentals actually making moves upwards. So these are the type of stocks that you can swing if you do see some type of opportunity. For example, we can see there's a high right here. I can kind of see some type of wedge right here actually. And then we get a breakout out of that. So you just really want to identify certain opportunities. Like if you see that and these are the type of stocks you trade, track statistics for something like this again. What sector is this in? What time frame is this setting up on? Which this one is the day chart. You can see it gets funneled into this corner and then we have the break, right? So, and then it even broke to its day high. Some people like to trade the breaks of the 52-week high as well. And you can see that would have worked out really well on this setup. But again, these are just stuff you have to track. What's the 1% of me buying something when it's breaking the 52-week high and it has decent fundamentals and this and that and this and that? So that could be one of your setups. You like to buy 52-week high breakouts, or you like to buy 52-week breakouts after they pull back. You know, it just depends what you want to do. And again, just remember to combine the fundamentals with it, because these aren't just any, like NIO isn't just a typical penny stock like the other ones. I believe NIO has a larger market cap. And let's just pull the website back up so you can see again how to do this for yourself. After you go here, you go to screener, click ownership, type in the ticker you want to analyze. And we'll see, yeah, the market cap is way larger in the billions than that, and the float is 1 billion. So obviously this is a lot larger. When the float and the market cap is that large, the stock is going to be a lot less volatile. That's why getting a massive move like we just saw in ACY isn't going to happen on this type of stock. After the consolidation, we're going to get a break over the highs, maybe push to new highs, catch more momentum, squeeze out shorts maybe. We don't know. Or maybe wash out some longs at these lows. Maybe make a lower low all the way down here. We don't know, but we just have to wait and see. That's just things to look out for. Look for the breaks of highs, pre-market breakouts, year 52-week highs. Find these points on the charts that are significant, and then go study the history on many other stocks to see if it's a repeatable action that you can rinse, wash, and repeat. So then you know what you're looking for in the stock market and you don't feel lost, and you can just become more self-sufficient overall. You're going to start building and creating your eye for opportunity the longer you're in the market. And I know when you just first start out, even the first 3-6 months, you feel kind of lost. You don't know if what you're doing is correct. Many things don't make too much sense. But I will just say it does get a lot easier over time. It really is just the screen time and experience. And that's just something you cannot teach. You just have to do it yourself and just have to put in the work. One thing I really like to talk about trading with is like sports. It really reminds me of sports because it's something you have to train for. You can watch all the basketball games you want on TV, all the championships and playoffs and regular season. No matter how many games you watch, if you don't actually go on the court and put in the practice, you're not going to be good. And I'm not just saying practicing hard for a week, practicing hard for 2 weeks, you're not going to be good at basketball. Even a month, you're not going to be good at basketball in 3 months or 6 months. You have to put in the work. This is the same thing in trading. Many people think they can just, what's the float? Let me research what the float is. Let me research what the market cap is. What is support and resistance? What's volume? What's this? What's that? And then when they learn all those technical terms and learn a little bit more about fundamental analysis, they then think, okay, I'm ready. I'm a trader. I know how to trade. And again, I just want to be realistic about how it is. It's not like that at all. It reminds me of a sport. It's something you have to build. It's a skill you have to put time in over and over and over again. And again, experience is the best teacher. There is no cheating that at all. It's just time and consistency. And you will start to be able to analyze charts for yourself. You will start to be able to spot opportunities on the chart for yourself. And you will start becoming more self-sufficient because of the work that you put in. So put in the work and you'll thank your future self. And that's pretty much all I have to say about that. So I hope you guys learned something new from this video. It's just a little bit more about my perspective, about how I view charts, how I view opportunity, and how I like to analyze. Not everything I do and say may fit you in your style of trading in the way you think, but I hope I can say something that kind of just sparks a light bulb in your head, maybe gives you a new idea to try something else. You know, you might not even trade the same type of stocks that I trade, But again, I hope you learned something new. I hope you enjoyed the video. If you do want to join the trading community with almost 20,000 members, you can click the links in the bio. You'll see everything down there. So if you don't want to miss any future videos, make sure you subscribe to the channel. And if you did get any value out of this video at all, please hit that like button for me. I appreciate your time, and I'll catch you guys in the next video.